Today we came in terrified by President Trump's new tariffs on goods from Canada, Mexico, and China. Although the market bounced back when we learned that the Mexican tariffs would be delayed for a month. I'm surprised that so many people were surprised by this, given that Trump talked about it a lot on the campaign trail. Still, now the tariffs have arrived and companies need to cope with them, especially companies with international supply chains. Which brings me to Flexport. It's a leader in global supply chain technology. It helps companies do a better job of managing their logistics. We got to know what kind of conversations they're having with their customers and how they plan to handle these new import duties. So let's check in with Ryan Petersen. He's the founder and CEO of Flexport. Get a better sense of what the heck is going on. Mr. Petersen, welcome back to Mad Money.
Booyah, Jim. Thanks for having me back.
Yeah, Ryan, thank you. All right, so what have the conversations been like with your clients who do business in China, Mexico, and Canada? Each one, tell me, because it's got to be crazy.
Yeah, it's a little bit crazy. It's day to day. I mean, I tried to take one day off this weekend, and next thing you know, I'm getting 40 texts from my team saying, did you see this new executive order and that one? So we're trying to be really communicating very clearly with our customers about everything we know, but it's kind of that balance of how much is over-communicating, because sometimes you're waiting for more official policy to be issued than just a White House statement, for example.
Well, you got to break it with Mexico. But tell me what would have happened if they had done them immediately. Would a trucker be invoiced? Would they not let him in? I mean, what's the actual physical process?
Yeah, you know, the way that we think it works is that you basically have this cutoff date, and they said that it would have been tomorrow, and it's have the goods been loaded at that point in time, and then you have to make a case. They might charge you duties, and you can make an appeal effectively saying that no, in fact, the goods were. This is for ocean freight. If it's a truck, it's got to clear the border, of course. But for ocean freight, if it's already on board, you can make that claim that hey, your goods were already loaded.
Well, I mean, to me, there would be pure chaos. I mean, everyone is overtaxed. No one's ready for it. I mean, wouldn't there just be lines around the whole globe because of this?
Yeah, it's the implementation timeline was pretty unprecedented. You know, in the 301 tariffs that Trump did in his prior administration, they gave us at least a month's notice to put things in. It's also for CBP themselves to go and implement these things. It takes them some time. So we weren't really surprised when Mexico got extended. We'll see what happens with Canada, though. There hasn't been an agreement yet today.
Now, Ryan, did you tell people, look, you got to get in ahead of this. If you have any spare capacity, warehouses in America, you got to ship the stuff now, unless it's perishable. And did people listen to you?
Yeah, we've seen a lot of that, especially in China. China has been, long foreseen that there would be sort of escalating duties on the imports from China. And we have seen that in our customer base, that people have been importing much more, trying to pull goods in. We had a 10% increase on duties from China. That's on top of all additional duties that was issued this week. But the real review is on April 1st. That's when the Treasury Secretary is required to give a report to the president, advising next steps on Chinese trade and a whole range of policies. And I would expect the duties will continue to go up. So, yep, if brands can, they're likely trying to import those goods ahead of time.
Okay, so could you explain to me the de minimis stuff? I see a lot of stuff from Shein and Temu, and it seems like they were getting a real break. It looks like there's no more break for them. Is that what's happening?
Yeah, effectively. So if de minimis means if the goods are less than $800, and they're directly consigned to the final consumer, that's you and me. If it's less than $800 per day, per transaction, per customer, then there's no duty owed. Regardless of what the duty rate is, there's no duty owed. So with this latest executive order, they shut down the de minimis program for goods that are made in China, for goods that are made in Mexico, and made in Canada. Now, this is a very big there's a very big change. It's a huge, some people call it a loophole. It's a statute passed by the government. I don't really call it a loophole, but whatever you want to call it, it's very big. A lot of companies use this. You mentioned Temu and Shein, but of the top 100 Shopify brands that sell, e-commerce direct-to-consumer brands, 30 of the top 100 are also importing in this fashion. What they'll do often is put the goods in Mexico or in Canada and then ship them one at a time, so they don't have to pay for air freight. They'll ship them one at a time from a fulfillment center in Tijuana. That has been postponed. If it's coming from China, you can no longer do that. If it's made in another country, say Vietnam, that has not yet been shut down. So we're going to monitor that very closely and see if they close that.
How about the unfortunate people who moved their business from China to Mexico thinking they were reshoring? Have they just kind of gone from bad to worse at this point?
It has, and Mexico, actually, we haven't really talked about it here, but back in December, right before Christmas, the Mexican government actually made a huge change to their import policy with 0 days notice, just announced it the day before Christmas, and it sent all kinds of brands into a tailspin trying to move their fulfillment. In fact, Flexport offers e-commerce fulfillment services here in the U.S. We doubled the size of our business already. We hit our annual goal in January because so many companies had to move their fulfillment operations back from Mexico into the U.S. So, yeah, it's been a crazy time in the logistics world.
Okay, so how's Flexport doing? I haven't talked to you in a long time.
Well, we're doing great, but our customers are really trying to stay on top of all these changes. And so it's a really interesting time. I think the more complicated global trade becomes, the more valuable our services is. Our job is to make things simple. We want to make international trade as simple as flipping a light switch. And so the more regulations that come out that make that harder, the more important our work is. And so we're having a great time working with customers and trying to solve for these complexities.
Do you think today was a bit of an overreaction, both with the customers and with the stock market?
In general, I'm not a stock market investor. I don't know how to weigh in on that stuff, but I think the long march of history says that human beings want to do trade with each other. Governments may put up tariffs, they may take down tariffs, but if you look at 800 years of history, back to the Mongol invasions, global trade has grown 4% on average. So I just expect that, if you look in 50 years from now, there's going to be way more trade than there is today, and I don't pay attention on the day-to-day
well, in the end,
changes.
Who gets hurt?
Yeah, I mean, at the end of the day, businesses that don't like complexity, they want to have some certainty about what's going to happen. It's very hard to plan a supply chain when it's changing day to day. And so I think it's really hard for these businesses to figure out, what is the government going to do and how should they set themselves up? Possible that this will lead to higher prices for consumer goods, but there's all kinds of other variables that may lower taxes or may create a simpler regulatory framework that might increase demand. I mean, we're going to see the price of air freight come down a lot if Shein and Temu can no longer do the same amount of volume. We've seen the Houthis back off a little bit here, probably out of fear of what Trump administration may do, but they were, all the container ships in the world have not been able to go through the Red Sea for over a year. That we're starting to hear rumors and talk that maybe the container ships will start going through the Red Sea again. That would really bring down the price of ocean freight. So it's hard to operate in really simple black and white world when global trade is this complex.
Well, we know that it can be navigated by you because this is your world, and I really appreciate you spending the time with us. I know you're a very busy man, but I want to thank Ryan Petersen, founder and CEO of Flexport. I love having you on the show. Thank you so much.
My pleasure.
Mad Money's back after the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.